You know, right? The unlimited nature of the stock market. In today's video, I'm going to share market update since Nifty is currently trading at an all-time high close to 18,000, and I'm going to share how the market is performing, where it is at, and how other sectors are performing. By the way, I analyze market and sectors and my portfolio on a weekly basis. I'm looking at market on moreover on mid to long term perspective. So I'm going to share the psychological process why you need to check only on a weekly basis, or even if you're a long term investor, you could even check on a monthly basis, right? Your portfolio. Remember one thing, whatever you do, you have to keep your mind stress free if you are to be able to operate efficiently in the stock market, because stock market is a sea of emotion and you could get lost if you are not following rules, if you're not planning your trades, if you're not planning your psychological process, because you can get lost seriously. So I'm going to share trading psychology around these areas. So please keep a tab on the trading psychology playlist that I've created for you guys. You'll find it on my channel. So without further ado, let's jump into my screen and see how is the market performing and how different sectors are performing and what's the road ahead. Now let's see where the market is at right now. So it is trading at 17,853 and it looks pretty bullish. So let's see this key point where it broke out of a stage 3. So if you haven't watched my stage analysis, I would highly recommend that you please watch my stage analysis video. And of course, some of the weekly I share weekly update on over a weekly basis. So please check the playlist on weekly update. You would find relevant content to learn what is stage analysis. So Nifty broke out of this stage 3, which was consolidating between 16,000 to 15,400. And once it broke out of that level, it moved past of 16,000 and then 17,000, and it is still bullish. Now something happened last week. What happened? So let me share, let me convert this to a daily chart. So you see market closed the week before around 17,585, and last week on Monday it gapped down about 100 points, and it was lagging behind for a couple of days, and then it got its upward momentum. Now what happened? So there was some news related to China. There was a default from one of their biggest real estate company, and some news from the US. So since the market is at an all-time high, of course these rumors, this news would affect the market, would distract the market. Now post that the thing that happened, market sentiment is still bullish because it is trading at an all-time high. It got its upward momentum and it is trading at 17,853. So the sentiment is still bullish. Now, one thing you have to remember, that market will see some sort of a correction, which we call pullback. So it could either directly come to stage 4, which would break down of this 30-week moving average and break below of this, and went down and trade below this level, so which we would call stage 4. So it could start stage 4 any day, right? Whenever market wants, market would come to stage 4. Now based on the sentiment, the current sentiment that we have, currently it is trading on stage 2. So based on that, it is of course looking bullish. However, let me share why market would see some correction and some pullback, and you should not bother about them until it is breaking below this 30-week moving average. So you have to know what is this 30-week moving average. So you should watch my technical analysis video, which you'd find on the channel's playlist on technical analysis. And I've shared in detail that what is this 30-week moving average and why it is so important. Because if Nifty breaks below of its 30-week moving average, then we would consider Nifty that it is on stage 4. Now, let's see why you should not bother about some sort of correction. Now, correction means some pullbacks. So you see, this is a pullback. You see, these are the pullbacks. Like once it reached about 15,000, 15,400, it saw some consolidation around these areas, right? Let me share the area what I'm talking about. So this is the range which I was talking about. So you see, this is stage 3. Once it after it broke out of this 30-week moving average and continuation of stage 2, and once it reached 15,400, it saw some consolidation around this area just above this 30-week moving average. Now, once it broke out of this level of 15,400, which was at an all-time high around that time, it again consolidated around this area. And you see, the consolidation took about 2 months, more than 2 months, here as well as here. So what does these consolidation means? Because these are the times where people are cautious. People are not sure of whether the market would go up or go down. And, this is the time where new players are coming into the market every time, because there is a news that LIC would come into the market, come into the share market, and all the LIC holders would they have to open their demat account for them to be able to access their shares and something like that. So there are some rumors, some news, and people are opening demat account. People are coming into the market. So that's why there are so many new players at the market right now. That's why market is so bullish. It could be for a different other reason. This is just my speculation, just my perspective. Now, see, after these consolidation, market again broke out of this level and broke past of 17,000 and is trading at an all-time high, like I said earlier, right? Now, what could happen from here on? It could continue its upward momentum, continue stage 2 continuation, or it could start some consolidation around this area, around 17,800, around 18,000. It is close to 18,000. Or it could just directly go down to stage 4. So 3 things can happen. Now, here at this point in time, you have to be very cautious in terms of your new buy. If you want to buy a share, you have to be 100% sure about your position size, about your risk management, about the sector that you're buying. I mean, the sector that you have to choose, right? You have to first choose a sector and then a stock. So you have to be pretty cautious when you're buying a new stock right now. But you should not sell any of your past holdings. Again, this is not a recommendation. This is just my perspective, what I see what the market is currently doing and what I think the market would do in the coming days, which is not, I'm not speculating the market, right? So you have to get this point that this is not a speculation. So market could do 3 things. Either it could consolidate, either it could go break past of 18,000 and go above and, break past 19,000, 20,000, which I feel it would, but it might start consolidation around this point, and it could break below this 30-week moving average. So this is a time where you should be very cautious when you're buying a new stock. Now let's look at some other sectors such as small cap. Now before we do, let me share another point. Now, since market is trading at an all-time high, now people are cautious, of course. People are fearing that the market would go down from here. So know one thing for sure, that market will do whatever it wants. So people cannot predict what market would do. Most of the time people will get shocked and see why market is doing that. So market will do whatever it wants to do. You have to get this point straight, right? Now, since people are cautious at this point in time, people are moving from small cap to large cap because, pharma, IT, those are the defensive sector. So people are investing their money towards those sectors and, moving out their money from small cap, from mid cap, from penny stocks, right? So you would see some volatility in the small cap sector. Now, let me share. So see, these are the pullbacks, right? These are the pullback area, and market went down. So small cap went down about 2%, 1%. Now, if you would check subsequent stocks, you would see that the stock is moving 7%, 8% down. One day it is down 7, 8%. One day it is up 17%, 20%. So with small cap and mid cap, your risk management have to be on point. If you do not know what is risk management, you should first study what is risk management and then only invest in small cap or mid cap, because these are the risky market. So the more riskier market, of course, the chances of getting more profit is higher, but the risk is at the same time, the risk is very higher, because market would move 7%, 8% one day. If you get caught on those moves, of course, you will lose money. Now, let's look at another sector, which is the media sector, which I've talked about a week back, and see where it is now. So it moved past stage one. So you see, this is the breakout level, but it pulled back, and again it saw this upward momentum because of some reason, right? Now, in the media sector, some news happened. So I shared about Zeal, right? Z share price. We could check my last video. I'll share on in my I button. Now you see, this is Z share. Now what happened with Z? They got merged with Sony Network. So this is the reason which the price went up, because of the acquisition. So Sony bought most of the shares of Zeal. And this is the reason why you see this volume. You see this huge volume compared to other weeks. So this is the reason why it moved past this stage one base, and now it is trading in stage two. And you see the relative strength also looking very lucrative. It just moved past Nifty 50, and it is outperforming Nifty 50. So now, but of course, because of the risk to reward ratio, you should not buy at this level. I see a lot of posts, a lot of social media posts where people are, FOMOing in and buying at 300, 318. So this is not the time to buy Z right now. I would just say blatantly, because this is not the time to buy, guys. You have to be pretty cautious. Of course, the market is at an all-time high. So if such any correction in the market, you would see 10%, 20% move in these shares. So it could come to its breakout level again. Of course, it could not, it might not. But due to the risk to reward ratio, this is not the area you should buy Z. Let's look at another sector, which is Realty. So I've also shared about Realty in my couple of videos ago. So you would find all the relevant videos on weekly market update as well as technical analysis. So I have three playlists, one dedicated to trading psychology, and one dedicated to weekly market update, and another is technical analysis. So you would find this video on weekly market update, where I've shared why the realty market is looking very lucrative. Now you see, once it broke out of this trading range, so it moved past stage one, right? Long-term stage one, you see, after this heavy fall down around the time of 2008, it could not move past of this level. Now it moved past of, you see, it tried to move past this level. It could not around 2018, and it moved past this week in July. And again, it moved past on 30th August. I believe I've created the video around this week. Now you see it got its upward momentum. Now again, this is not the time to enter in the reality. If you haven't entered around this point, or this point, this is not the time to enter in realty stock. So you miss the bus, miss the train. This is the power of stage analysis. So you have to know what are stage analysis, how you should look in the charts and see which stage a stock is in right now. Is it in stage 1, stage 2, stage 3, or stage 4? Now if you watched my previous video, you should only buy a stock which is in stage 1. Which is breaking out of stage 1. So once it is in stage 2, you should consider buying that stock. If it is in stage 3, you should avoid that stock. If it is stage 4, you should pledge yourself and do not make an entry while it is in stage 4. And of course, you should not enter while it is trading in stage 1. You would only buy once the stock is breaking out of its stage 1 to stage 2, and of course on stage 2 continuation. I believe the information I shared was helpful, and you are now better prepared to face the market. My next video will be very crucial, which will be on trading psychology, that why you should have a plan and why you should not enter, why you should not buy anything if you do not have a plan, and why it is important and how you could do that. So please keep a tab on my channel and subscribe to my channel. And if you like this video, please like and share with your friends and colleagues. And I see you guys on my next video. Thank you guys and have a great day.